Dude, I can't wait to crush some more Destiny, man, later this afternoon. I've been trying to play all week, man. I've just been too busy. Like, dang it, everybody's telling me about it. I'm like, don't spoil it for me.
What is up, everybody? Solomon here. Super excited to be with Genfinity. This is actually the inaugural kind of let's go live on Twitter or X Spaces. Let's go live across YouTube. So you'll be seeing this across Darren's channel, my channel, Genfinity's channel. And this is the first iteration of this. So if you guys like this type of content, please let us know. If you want us to kind of, do certain topics or whatever that may be as well, please let us know. Super excited today to be able to do this with the support of the XDC Foundation. And this is kind of the first iteration of the XDC show, we'll call it. So we're going to be tackling trade finance, tokenization, real world assets, 5 years of development and growth within the XDC ecosystem. And we'll be doing this across multiple different ecosystems as well. But this hour is going to be all about the XDC ecosystem as well as trade finance, the industry as a whole. So excited to have Lance Lilly, who is the ecosystem development manager within the XDC Foundation. Excited to have somebody that I'm sure everybody knows that is watching this, which is Quincy here, software developer within the XDC ecosystem as well. And the man, the myth, the legend. We've got Darren Moore Jr. up here with us today too. So how are all of you guys doing today?
Doing good.
Great.
Doing great. Yep. Good to be here with y'all. Good to try this out too. We were talking about it. I was like, all right, we got to give it a shot.
Yeah, excited for live streams.
Yeah, Quincy, you've done them for a bit on YouTube, right? So
yeah, I've done live streams a bit before. They're always kind of fun, always sort of like a quirky type of content. So lots of fun.
I kind of like this video format too, like being able to see, y'all versus like spaces. Like even when we do stuff for the podcast or anything like that, even though it's audio only, we're talking, like this. Like I feel like it's easier to talk to somebody. I mean, spaces you can do it too, but when you're talking to somebody, you get to see them. It's a little easier for me anyway to have a good discussion.
I think as we can. Oh, sorry, Darren, go ahead.
No, I was just saying I agree. You can see facial cues and stuff, so you're able to read people a bit better. It's harder when it's complete opaqueness and you're just talking to somebody through audio only.
Yeah.
I think the goal here too, which will be really cool, hopefully over time, is to be able to really kind of share, whether it's like even Quincy from your standpoint. I think it'd be really cool for you to walk us through some of the stuff that you kind of deal with when you're like coding and developing on the network. Like we don't really see that type of stuff like a lot. We kind of see like, here's an article about what's been built, but like we don't kind of see the processes behind stuff, or kind of what you said, Lance, is just being able to actually like kind of talk to people face to face instead of just having these 4 or 5 or 6 different people kind of sitting behind a screen. So
yeah, I think we were talking about that on the space yesterday. Like one of the things that I mentioned is like maybe not how difficult, but like I think there's a misconception on building, with this technology, like that that everything can be built on it, and that the possibilities are endless. I mean, there's a lot of possibilities, don't get me wrong, but I think like once you get in the weeds of it and you start actually working on like integration and building, you realize there's a ton of it involved. Like I remember, how it was like in the earlier days of the crypto Twitter, community, people would say by this year it would happen, and this year, right? And then everybody would talk about like, well, what are those barriers? Like what is it? Is it regulatory clarity, and is it tools, and is it infrastructure, et cetera, right? But like a lot of it too is teams, companies, businesses, industries, whatever that is, that may want to use blockchain, but they don't have any idea how to get started. And I always tell people, start any other way that you would building an app or anything else. You're just incorporating a specific function or feature or technology or tool within the app and software you're already building. It's not, don't think of it as like it's this completely alien, different world that's just crazy and hard to get into. Just start building, just get into it. The same way you would start a business or anything like that. Just get started. So, but there's a lot of that misconception out there, I think.
Yeah, I think is there some mysterious invisible hand figure behind the scenes waiting to flip some imaginary switch? And it's just like, at the end of the day, it's like, we are seeing real world adoption on a much more consistent base than we were even a few years ago. Darren, I remember, the last time that we probably did something like this live, Darren, was when you and I used to do like the Solomon Moore podcasts that we were doing, and we were like trying to deep dive and try to find like pieces of information. But dude, we've talked about this, like how crazy it is to watch. It's all like daily there's something coming out.
I know. Yeah, like you said too, like
absolutely.
a lot of the news that pops out today, if it would have happened like 3 or 4 years ago, everybody would be going crazy. And like on the dot connecting stuff, man, like that stuff's like real interesting to watch sometimes, you know, like when you see, you know, theories and stuff that people have, and you know, stuff like that. The conspiracy theories are the funniest ones, but yeah, that stuff's interesting to watch.
Darren, what do you think? I mean, we've seen a total shift, right?
Yeah, we're completely desensitized to where we've come. I mean, like we used to, you know, connect dots. Oh, this company is positioning with this company, and they're involved with this initiative. And now it's more of, you know, they're just coming out in the open and saying it. We're just completely desensitized to it. And to your earlier point about like blockchain, you know, people like fail to see that it's a tool in the tool chest. It's not necessarily like this technology that's going to solve all of the world's problems. It's just a simple tool of truth verification on the web, and that's a really powerful tool. But either people go too far with it or they minimize it too much.
Do you guys, Quincy, I mean, from your standpoint, and we'll share a screen here in a second, but I think one of the things when you get into kind of theories and stuff like that, and I'm not going to sit here and say like people's theories don't have like splashes of accuracy and stuff like that. It's interesting to dive down that rabbit hole, but at the end of the day, I think those theories are all attached to kind of this premise and belief that like these organizations have ripped out all of their infrastructure and they've replaced it with blockchain. They're just waiting to flip a switch. But I mean, from building this stuff out, Quincy, I mean, you work on the software that these guys are actually using. Like, what are these like institutions? What are these enterprises? What are, from the retail standpoint, even like what makes sense for people to use? Like, how do you need to build tools that just make sense for these kind of entities to use in ways that work for them?
So yeah, usually like one of the biggest sort of functionalities that we end up seeing that a lot of institutions get out of blockchain is usually some sort of settlements and some sort of record keeping of any sort of. So what we end up seeing, and usually what ends up being the biggest hurdle isn't so much of like them like building out the code or whatever. It's sort of like conceptually redesigning their current architecture in a new way. It doesn't even matter if it's crypto or not. It's just essentially just reimagining how they would go about doing something they've already done. So yeah, so when interacting with new businesses, the biggest thing is how how well can you conceptualize a process that they already are engaging in, and how can you expand that process to more entities on blockchain? And then usually you get an added benefit of mutual record keeping. So you get a copy of the records, the people you're engaging with gets a copy of the records, it's all on chain. And then usually it's just going from there. So a big portion of this adoption process is just going to these different institutions and seeing, hey, how do your businesses operate now and how can they be more efficient on chain? And then sort of like segmenting aspects of their solution into this new technology.
Yeah, I want to piggyback off that a little bit too, right? Like I think we talk about like what tools do people need to make it easier and all that, and that's good. Like we do need to be doing that, obviously, right? But I think Quincy like said it perfect. I think it's more along the lines on understanding what it can do for you, right, and how your processes can change. So I think more of the hurdle is like thinking about maybe the business and use side of this things, right? Like what are the possibilities? Like how can it make my processes better, whatever that is, right, in my business, and how can I do that? Because once you figured that out, like what you can do with it and then how you can use it, there's always figuring out how to build it. You can build it, right? There's people out there that can build it. You can make it happen. It's more, you know, what from it can I use and how do I use it? That's really the like kind of biggest hurdle. And that's kind of what I was hitting on yesterday, like on the call. Like educational may not be the way to put it, but it is. But it's more along the lines of these industries understanding how it can benefit them and how they can use it, but not like, oh, it makes, you know, it available 24/7 and oh, more liquidity. Okay, how? You know, what is it that we build that does?
You know, it's a good example. sort of in an abstract way, it's sort of like how right as smartphones and smartphone apps became a popular thing, there were tons of businesses that had websites for at least a decade at this point. And then there's like this conversion of, oh, you could have this app. But then there's this element of like, what would I have an app for? Now, obviously, every business has a website, they have an app, they have whatever. But there was like this middle ground period of time of what would I, have as this business app, and whether it be a menu or whether it be being able to uh, order something or whatever. Everyone has an app now. But there was a period where everyone had a website and nobody had an app, and there was this idea of like, what's the point of? And obviously, we all get it now. Like being able to have an app, just you can just access more people and access people on the go. But I feel like there's that sort of like that transition where everybody has this traditional infrastructure, whether it be like financial or whether it be like web to cloud or something. And then there's this new technology, and then there's sort of like this finding its place of, okay, it's here, but what can we do with it? And we can see that you can do a lot with it in these regards, but what are these other things that we can also do with it now? And I think different businesses are trying to find their place. I think finance is really trying to find its place right now, but I think every business may be able to find certain aspects of blockchain technology that they may be able to utilize, whether it's from settlements, whether it's from payments, whether it's from just being able to move cash or capital, or whether it's just being able to build apps that have really good record keeping and being able to share that between other applications and other parties.
Yeah, I think one story that we heard, Darren, I can't remember who we were interviewing. I think it was the dude that was the ex chief enterprise architect of like Coca-Cola or something like that. And this was like maybe 4 or 5 months ago. Do you remember he told us that story about when the internet boom was kind of occurring, and there was obviously a lot of stuff that failed, but real world companies were starting to launch websites, and he talked about Pizza Hut. And he's like, Pizza Hut, when the internet was formed, basically they were like the first kind of entity to kind of launch out a mailing list. And all of these other companies were like making fun of Pizza Hut, being like, what the hell are you going to do with a mailing list? All this stuff, like attaching emails. And then I think it was, I forget which bank it was, but it was somebody that integrated as a payment provider into the internet. And all of a sudden, Pizza Hut had thousands of email addresses, and they had a direct way to reach out and incentivize and monetize that stuff, where like now everybody else was playing catch up.
That's a good example, right? Like that's where, this is trying to go still. Like they found an opportunity to leverage, that technology in a smart way. And it's more of that. Like, I think like more industries and people and companies and teams need to just kind of understand, what it is and how they can incorporate that and use that and adjust. So, yep, that's a good story. Really relatable to that.
Darren, I know you and I have been doing these for a while. I would just love your take on where we've kind of gotten to, and then we'll dig into the weeds and do some share screen here. I hope that this podcast, like I went on to Twitter real quick while we were doing this to make sure it was live. Nobody do that, by the way, because then you'll just get totally freaked out because you see your voice talking live on a screen while you're also trying to like concentrate on like dialogue. But Darren, I would just kind of love some of your thoughts on kind of how you kind of foresee like this technology kind of shaping together in ways that make sense.
Well, the Pizza Hut story is a great story because it's like the application of it, right? When real world businesses started applying the technology, that's where you really started seeing the boom happen. So I think that needs to happen with blockchain and cryptos. You're going to need to see the businesses actually like benefit from the technology and demonstrate it to everyone else. But as far as like, financial assets are concerned, I mean, we're talking about, quadrillions of dollars in market cap. And at the same time, you have a really bad debt problem. You have just really bad things happening all at the same time, and a parallel type of trustless system that kind of rids a lot of these problems. Not all of them, but it rids a lot of the problems. So you're seeing like confidence in one system break down, and at the same time, like where are the markets going to continue to do business after, some of the hiccups form? I think it's obvious in my mind, but I'm just kind of waiting play by play and watching everything. So like the ECB and the Bank of Canada are lowering interest rates. So I'm just wondering, what snowflake causes the avalanche, and where do we see the adoption occur after that avalanche is formed? Because once liquidity dries up, where is it going to come out? It needs to be somewhere. You need to have commerce and global economics take place. So
yeah, I think one thing that I kind of find interesting right now is you look at like there's certainly aspects of like real world adoption where all these behemoth entities and I know that even you guys, through the XTC aspects, there's probably a ton of stuff you cannot talk about, but there's real world aspects that you can talk about that have happened. But what I find interesting is like if you look kind of across the board, it seems like everybody's just been dipping their toes into different things almost on a cycle to cycle basis, where it's like maybe we see cycle like the crypto cycle stuff, but like thinking back to 2018, when we saw Lipton, rebrand to Lipton blockchain instead of Lipton iced tea, and then looking at 2020 and Nike and Adidas somehow got into the NFT game where we're starting to mint NFTs. And was there like a real sustainable business model there, or were they just trying to catch a trend and run with it? I know I hear from a lot of people, and I know even from you guys, like tokenization, even though it's been around for a handful of years, I would say it is one of kind of the more widespread topics over the past 12 months, especially. This isn't a trend though. You know what I mean? Like it seems like this is something where it's starting to dip the toes in the water. And then what are your guys' views on kind of where tokenization goes? Like, cause let me preface it this way. I hear drastic differences as far as how much of the globe is going to be tokenized. I mean, you can look and you see 5 trillion, then you can look and see 20 trillion. And I'm curious just from your guys' opinions, not the opinion of like the XDC Foundation or whatever, but just you guys, where your opinions are as far as what's happening here.
Yeah, I'll take this one first. Or Quincy, you go ahead, man. Go ahead.
Oh, I was just going to say that. So I think everyone gets so consumed with how much tokenization will happen versus how much of an efficiency tokenization may have. The biggest benefit of tokenization isn't just so much of it being a token. It's being able to add those additional layers of automation and derivatives on top of that. Fractionalization, being able to have them locked up in smart contracts and even have those smart contracts tokenized. Being able to have additional layers of derivatives and automation allow the tokenization of these different assets to be worthwhile. That's the big benefit. A lot of people talk about tokenization. It's almost like this assumption of we're going to have tokenized assets in a traditional world. And I don't think that's going to be the case at all. Well, the tokenized asset in a more cohesive world, actually a world where anybody can have access to these assets, big or small, like I said, fractionalized, in a world where basically an entire cohort of financial entities can now trade with each other with only having access to the internet versus only having access to the nearest broker. The thing that I find sort of interesting is unless you're sort of like in this financial world or tangential to it or from it or anything like that, it's hard to really see the tangible benefits. I think regular people see it in terms of like settlement times going up, like payments overnight, or even markets running 24/7. But there are a lot of other benefits in tokenization that are seen in these worlds as well that I don't think get enough attention. But also, unless you're in it, you don't necessarily get to see the efficiencies. You know.
Yep, Lance.
Yeah, like you touched on, NFTs and how it's kind of gone through phases. NFTs did have its phase, but a lot of good came from that too, because people started actually trying to use NFTs for what they could be functional for and used for, right? Like, so it did open up a lot of doors and possibilities. Tokenization, same thing. It can be just as, I guess, not bad, or the misconception of tokenization could be the same as NFTs in a way, right? Like, I think the way you should look at tokenization is like for instance, like a token, right? You have a token that's minted on, let's say, XDC, right? A layer 2 or an XRC20 on XDC. Literally all that is basically is like an accounting mechanism, right? There's a smart contract that basically creates all those tokens. So like if you look at your tokens, let's say if it's like plugin or whatever that is, right? Like all of our plugin tokens are going to share the same contract address, right? So it's basically like a smart contract that basically keeps a ledger, a record that you have this many, et cetera, right? So it's an accounting mechanism, basically, is what it is. And that's awesome, because imagine now, like, you have this whole office or company that's these accountants for you, you know what I mean? And you'll still need people like that, but now you have a way to automate a lot of those things. And tokenization can do things like that as well. So I think, like, what's going to happen, and it already is happening, right? Because in this industry, people have been using tokenization for a while. Everybody knew, or not everybody, but a lot of people knew this was going to be something that can be useful. But as new players come in, new industries come in and figure out and understand how it actually works, there's a lot of other possibilities around that as well, besides just transferring, a token or keeping a ledger of a token. There can be, rights, there can be permissions, there can be access, there can be intangible, there can be tangible. The possibilities are just crazy. And I'm excited to see, like, what else is going to come out of this from the capabilities of tokenization.
Darren,
the markets become global. Like Quincy was saying, the markets become global. Everyone can stake liquidity. It's like, it just snowballs after that, because there's a lot more possibilities when everything is open and accessible versus closed.
Darren, whenever we had, so you probably would describe this and explain it much better than I can. And I said, thank God we had you on whenever we brought Tyler on from Fathom, because from the traditional sense, you really kind of dove deep in for the past few years to understand the way that these markets work. And for those that aren't aware, Tyler was at S&P Dow Jones Indices, and he was also, I always mispronounce this, but C Currency, I think is how they pronounce it, but which was acquired by DTCC, obviously. So
Securrency, yeah, that was good. You did good, man.
But yeah, exactly. But Darren, he was taught, there was one point of this that really stuck out to me, and you kind of broke it down in this, and I would love if you could do that here, where he was talking about, for the first time, you can literally leverage the value of things like your house, or leverage the value of things like, your car. And that's where a lot of these people's wealth is kind of tied up into. Can you maybe just touch base a little bit on that? Because I think that was really interesting.
Well, I mean, the way the rich preserve their wealth, right, is they don't actually sell the assets. They take loans against the assets. Like Jeff Bezos, he takes his stocks in Amazon and he borrows against them, then it's not a taxable event. So what Tyler was saying is that when you have tokenized home equity or tokenized car title or whatever, you could stake that and borrow against it. So if you don't pay back the loan, your token gets taken from you, and the deed to your house or the car title gets taken from you. But if you pay off the loan, now you have liquidity and you can take advantage of opportunities in the market. And that's how the rich do it, right? So they don't necessarily start selling their assets and have all these taxable events. They just borrow against it and build up their assets and kind of build like a house of cards. That's why when you have downturns in the markets, it's so bad, because everybody needs to sell stuff to pay stuff off and everything like that. But if you had the whole entire global economy, just middle class America, having that opportunity and that capability, now you're giving to those people a way to build their wealth, but also you're providing a tremendous amount of liquidity into markets. So, like, what does that do? That's what the Fed's purpose is try to stimulate the economy. So that by itself stimulates the economy without actually having to print money or do anything to that effect. So that's where I really see like the opportunities with all these technologies, is you'd be able to really push up transactions and economic activity.
Yeah.
And have
I think, like, we talk about liquidity so much, or that term is used like so much, it's almost like we don't really think of it anymore. People don't really think of it anymore, but how powerful it really is. Not only that, but like putting more liquidity into the market, is great for a lot of things in the economy. But imagine also just what it does for the individual as well, like empowering the individual to be able to have more access to more, liquidity, and how much that could mean for the economy. And not only that, but as it moves along, imagine how many things you can make liquid, right? That you probably couldn't make liquid before in the past. Like, that is even crazy to think of as well. Like, who knows what kind of stuff that you'll be able to have as like some sort of valuable asset that you could use to trade with people. And just empowering the individual themselves is the part that I'm really excited about. I mean, the traditional finance of it, and the technology aspect of it is awesome. Don't get me wrong, right? But none of this can work unless the users and people, right, like to use this stuff. And the ability to empower the individual is what I'm really excited about with this stuff.
Quincy, I know you've done a ton of, I mean, you're always exploring kind of new ways to innovate kind of at the ground level. I'm just curious what your thoughts are as far as, you know, what you kind of think is most interesting with some of the stuff that you're working on, maybe even right now, before we kind of get into the weeds with some of the more recent announcements.
I think one thing that's going to be really interesting, and we've seen this sort of building up for a little bit, is subnets. And the reason I say this, and the reason I keep bringing this around is I think I think not only just subnets, but being able to have a segmented environment to be able to not only test but produce different blockchain tools before you start moving those tools to a public chain is going to be the gateway that allows for adoption to be like the primary gateway for adoption. And as I see more and more entities, that's sort of what I end up seeing is they want to get into crypto, get in the blockchain, but they don't want to necessarily put too much risk on the main chain. So they want to adopt a set of tools so they can start getting their feet wet in a sense. And usually those set of tools usually encompass subnets and a bunch of other EVM tools as well. It's really interesting to see this because it seems as if uh, with tokenization, you may end up seeing these environments and these subnets produce whether it's different tokens, produce whether it's different automation tools. And as they start refining these tools, they'll start pushing these tokens and these contracts to the mainnet. So that's just something I find really interesting, and I think that's going to be sort of like the primary gateway to adoption is the adoption of these subnets in a sense, or these private environments to use as a gateway to these public chains, especially XBC.
I know one thing that we're seeing is so just looking even over the past, so you've got Carlos from Securitized up here. There's a congressional hearing on RWA tokenization. And there still seems to be like a lot of misconceptions about the capabilities of these networks. And I know, Quincy, you kind of bring up a really valid point too, where you still do need more private environments. You certainly for traditional financial instruments and to get kind of the like banks and enterprises, things like that on, you have to really deal in digital identity the correct way with verifiable credentials and all of the other stuff that you would need from the compliance angle. I don't know if you guys have seen this at all, but I mean, I have seen that it seems like there's been more of a shift over the past year of actually engaging with regulators to an extent. But things like this, where there's misconceptions on what you can do on a public blockchain, you can build on top of it. You can add KYC, you can add AML, you can add KYB, you can do all the things that you still need to do. What are you guys' thoughts on like the gap here to support meaningful regulation?
Man, it honestly, like it, I don't know, wouldn't scare is probably a powerful word to use, but like it's weird to watch regulators talk about creating policy around something that you understand and know deeply and that you're ingrained in, right? Because then you hear a lot of the stuff that they say that just makes no sense. I'm just like, man, the stuff that they're creating or talking about around this makes no sense. Like they're telling me that they do not understand what they're regulating. And it also makes me think that they're also making policies probably about a ton of other things that they have no idea about, right? And it's like, I don't know. I just think of it in that way. And, thankfully, there's people like Carlos that are going and trying to educate, policymakers. There's been people from other, teams and layer ones and people in the industry that are really advocating for this. And I applaud them for that work and hope that they keep it up because you got to get this right, too. Like this policy can't cripple, the industry or, whatever that is, right? Like they just need to make it right, like get this thing right. And I hope that they will, but we'll see what happens.
Yeah, I mean, even just reading through this briefly, I mean, Congressman viewed it, indicating that activities on public blockchains are beyond control. Some random person, et cetera. And then obviously Carlos, CEO of Securitize, saying that whatever wallet he's referencing is in fact not the BUIDL wallet. Securitize responsible for tokenizing BlackRock's BUIDL fund. He added the tokens that they issue are only transferable to whitelisted wallets. Obviously, there's levels of compliance there, and objected to statements implying that it was not possible to have transactions on a public, again, not possible for transactions on a public blockchain to comply with KYC or know your customer and anti-money laundering or AML laws. it's wild that like that some of these assumptions are still made. I mean, we're sitting here in 2024. We know, like, being in this industry, like, directly, we know all of the capabilities. We know the levels of the strides that some of these ecosystems that are trying to do things correctly and you know, are trying to take to make sure that everything is as compliant as humanly possible. And that you still see the kind of the misconceptions surrounding all this stuff.
Another thing that stinks about that also, right, is like, let's say, you know, the everyday individual that watches the news or whatever, or reads stuff like this, it also gives them the mindset that, you know, it's this dirty place, it's this bad place, you know, that all this bad stuff happens. And that's just not the case. I mean, I don't know how many people I've talked to that thought about the technology that way because they heard about it on the news or, you know, on the radio or whatever that is, right? And then when you explain to them, you know, it just kind of makes that light bulb go off. But it's, you know, again, back to what I said before, like, not understanding what the possibilities are is dangerous, you know, when you're trying to make policy around something. So that's just another point right there that you just talked about. Another example.
And
the,
I'm curious,
the other part is like they could completely omit the fact that like you could push illicit payments through like the traditional system too. At least with like these technologies, they're completely transparent, so there's always somebody that could be watching, or even a bot watching all the time, so they'd be able to pick up on the illicit payments versus kind of like walled gardens. There's no way of actually knowing until somebody picks up on it that's honest. So there's been banks throughout history that were pushing illicit payments through the traditional system, and they completely omit that.
Yep.
Quincy, I'm curious from your standpoint, because we've seen this, and then I'm going to hop right after this into let me make sure I'm on the right screen here. Some of them are network milestones. I know that we've got a couple of different pieces of content here, but if you like, for those of us paying attention, obviously, you know, it seems like there's a lot of different cogs that play into kind of the wheel of adoption here. And I think a lot of this stuff for institutional adoption kind of surrounds itself around identity in certain ways. And then you tie in verifiable credential type aspects into identity. You certainly kind of need, like you mentioned before, kind of the meaningful privacy in certain regards. I mean, I can even think I saw like a couple of days ago, like we interviewed David from Ripple a few days, like a week ago or whatever. And I asked him about verifiable credentials, and didn't know that like yesterday there was an improvement proposal for verifiable, credentials on the network. So it's like, is this the type of stuff, like, talk about all of these different kind of pieces coming together just briefly, like how, because there's obviously a lot of work to be done. There's a lot of work that has been done, which we'll go over here in a second, but there's still a lot of work to be done. And I would just love your kind of thought on how a lot of different areas of technology have to kind of play in.
Yeah, I think so. Funny that you say that about the verifiable credentials, because that's actually been sort of a thing for a while now. You could have all the DeFi instruments in the world, but if you can't verify who you're engaging with, like, what's sort of the point? But I do feel like there are a bunch of different, like, adoption isn't just one thing, sort of like you said. There are a bunch of different pieces that go into where we're seeing adoption. I think one part of it is seeing the talent pool increase of developers getting into crypto. I think another pool of it is different improvement proposals to allow people to identify each other on chain, different improvement proposals to be able to recognize different tokens on chain. I know there's been a few proposals around like different tokenization and securitization means, and whether it be regulation as well, whether it's the regulation of a new ETF or whether it's the regulation of the classification of this asset class. These are all just different nodes on a web that contribute to what adoption is. And we don't need full adoption to start seeing a lot of these technologies take off. We just need enough of these nodes to connect together enough for somebody to be able to traverse the web in a sense. Because right now we have like these little like siloed economies in a sense. Whether that just be crypto capital locked up on these different crypto networks, or these crypto networks being disconnected, or a lot of Web 2 networks want to start getting into the Web 3 game, but haven't necessarily been able to adopt their tech stack. So there's a lot of different components in terms of what makes adoption. And every little bit helps contribute to the overall ability for people to participate in these networks and participate on these chains.
I also think that, like, I think people imagine it as like there's this, you know, top of the mountain where like when we get here, that is what adoption means. Like we're here, it's arrived. But it's like it's going to always be there is adoption already, you know what I mean? But like it's going to be continually evolving. You know what I mean? It's like it's not going to stop. I mean, people still think of new and creative ways to use the internet, even. You know what I mean? Like it's going to just keep evolving as it goes. But there are, like Quincy said too, like there's things that we still need, you know, certain compliance things and certain aspects around like identity and, you know, from a legal standpoint, like what is enforceable by law, you know, using this technology, what is not enforceable by law, you know what I mean? State to state, you know, things are different. Think of like real estate, for instance, right? Like real estate, people talk about tokenizing real estate, but don't think about even in the traditional real estate world, it's different in every single state. You know, think of like I just sold a truck, you know, and the guy was from like another state. Like there's different processes for doing it that way. You know what I mean? And different, you know, regulations involved doing it that way. So there's like little things that I guess people don't really think about. They have to be figured out to make that adoption start going even further. But adoption is not really going to stop in my mind. Like there's not this, oh, we're here, adoption's done now. It's going to like keep going.
Well, and I think it's a super valid point because it's like, yeah, there's not any time. Nobody's going to be like this and be like, that's it, guys, you know, wrap it up. Because like we've seen so many changes, like not even in the past year, in the past 6 months, you know, this space rapidly evolves. And it's like, I mean, and Darren, I can think when you and I started doing these videos and everything that we were talking about with blockchain was pretty much tied to payments. And it's totally changed. Like, and I think Quincy, you bring up a really good point too. Sarah, Genfinity Sarah, shout out to Sarah, says we need like global standards. I think it's interesting too that Quincy brings up the point where it's like, okay, now that you've got these things tokenized, number one, why would you tokenize them? Number two, now that they're tokenized, what can you do with them? What environments do they need to go in? And it's not just, I mean, yeah, liquidity plays a huge part in it. But when you think about like the tokenization of like our data, you know, what are you going to do with people's data? Tokenization of data that goes into like some of the large language models for AI stuff. I mean, that's kind of really where the ticket is, I guess. And Quincy, is that kind of, am I kind of correct there in that assumption? Is it's not just tokenizing all this stuff. It's why would you tokenize it and what are you going to do with it now that it's tokenized?
Yeah, you're basically involving, you want to be able to take a already pre-existing set of assets and you want them to be involved in a new environment where you're able to get these promises of quicker settlement and automation and all that. And the biggest thing you want to focus on is once you're in that environment, what are all these different benefits that you now have? We talk about liquidity and access and all the different people you can engage with. We talk about fractionalization and derivatives and all the different ways that you can be able to make other tokens of their token or be able to reference your token in other ways. We talk about automation, like little like DeFi networks or DeFi protocols, whether that just be DEXs or marketplaces, or whether that be like full blown automated lending protocols. And then we go into even what you were even saying about data. A lot of people go, oh, what is tokenizing data? It can be something as simple as tokenizing access to data. If I have some sort of insight or analysis, how much are you willing to spend to be able to have access to that? Boom, I can tokenize that and be able to be in it, like that's like token gating or whatever. So there are a lot of different things that you can now sort of look into. There are a lot of different ways that you can now start managing these assets in this new environment. I think once people are able to be introduced to these new environments, I think it's being able to build on top of that, being able to build these new applications that can facilitate these automations or facilitate these better mechanisms of settlement with more parties than they otherwise would be in their traditional environments.
I think
it has very little. It has very little cost to actually tokenize something versus like if you securitize something, the costs are way up there. So if you're able to just tokenize everything, what kind of opportunities does that open up?
I think it's interesting too when you think about like our data, and I'm going to get into the screens we have here because we're going to run at time if we don't. But when you think about tokenizing people's data, especially with like the rise of AI, and like, okay, so this should be super prevalent to anybody that is in crypto, that is on crypto Twitter, where you can't even tell what's real. You can't tell what most people coming into this space see an account with, 200,000 followers, and they're like, oh my God, this person must be a genius. Like every tweet that they have is getting like tons of likes, and then come to find out later that like the majority of stuff that you see on Twitter is like botted out nonsense, and it's like what's even real, what's fake. With like the adventation of like the rise of AI, as these tools become slicker and slicker, it's going to be harder to get to the point where you can separate what's real, what's valuable, what is even a person, and what is kind of this algorithm that looks like a person, and what's that telling me. So the thing about tokenization of data and like data provenance, and like being able to prove that this is me, this is what the content I'm pushing out, and having that kind of live on chain natively, that stuff gets really interesting, because I feel like even the data aspect is like, I mean, how do you put a value on personal intellectual property?
Yeah, I think like there's a lot of work that is being done by a lot of teams like around data, and I think that's also another aspect of like blockchain's capabilities that I think there's some misconception out there too, right? Like a blockchain itself isn't really good at like storing a lot of data, right? That's not really what it's built for. It's built for more of like keeping a ledger, or verifying something, right? Like putting something on a ledger basically. So you would still need to have ways to basically use that to verify the authenticity of data or the source of that data, right? But it wouldn't necessarily live on chain, if you will. It would only live on chain as like its identity, right?
Like
Or
a
it's
proof or something, like a
right, a
knowledge
way to
proof.
yeah, exactly. And there's a lot of work being done, around that. But yeah, I think a lot of people think that you can just load all these things onto a blockchain, like all this data onto a blockchain, and really that's not what it's for, and not really what it's capable of doing, because it's not meant to hold large amounts of data in a block.
I'll put it into context for you guys. So ordinals right now obviously is like directly writing data onto the blockchain, right? So like to write 3.1 gigabytes of data onto the Bitcoin blockchain, how much do you think it would cost, Lance?
Gigabytes? Oh man, I don't know. Yeah, I don't know.
Quincy, you got any guess?
Tons, man. I couldn't even. It'd probably be like a tenth of a Bitcoin, maybe. Like I don't know, something in that regard. Probably something, and I don't even know what that would be like in dollars, but probably something in ridiculous.
$5.5 million.
Yeah.
5.5 million.
Yeah.
For 3.1 gigabytes of data, like directly.
Oh my goodness.
So this is
because think about it, like it can't put that much. I don't know what the block size is or whatever, you know what I mean? But like I imagine it's gonna have to put, I don't know exactly how it works from a technical standpoint, right? But I mean that's a lot of data to put, on a blockchain.
Yeah.
Like that's I gotta look into that. Like I wonder how all that works.
Yeah, the ordinal stuff's interesting. I mean, writing data directly on chain, basically, like, or inscribing. I should say inscribing.
Yeah, there you
go. So I want to get through this real quick with you guys too, because I think this was this last Saturday? Yeah, this was Saturday. 5 years of development, advancing real world asset tokenization. Lance, I know you've been with the foundation for a couple of years now. Quincy, I've known you, I know, for a few years at least. What are some of the biggest things that just stand out? I don't want to, we don't think we're going to read through the entire thing here. But, you can look at key measurement areas of growth: 426 nodes, 1.6 million accounts, 75.3 million blocks, 16,000 smart contracts. The trade finance aspect, we are seeing a lot of real world adoption. I'm curious from your guys' standpoint, like what sticks out the most to you, I guess, recently, because the recent stuff is certainly the more prevalent to kind of get into the weeds with here.
Yeah. Go ahead, Quincy.
Yeah, I was gonna say, in terms of stuff that's been sort of standing out, the big thing now is really prepping, everything around 2.0, and everyone's sort of getting excited around 2.0 and the security and forensics capabilities that it's being able to provide. That's sort of like the big thing wrapped up in the 5 year for recently.
I'm looking at like DAO. I know we've talked about XDC 2.0 and the subnet aspects, and we still have our interview from Consensus we have to push. The Trade Finex launch. Is there any way you guys could Lance, maybe just touch base a little bit as far as what that's representing into the trade finance?
Yeah, I mean, TradeFinex has been something that's been, known in the community for quite some time. But it's good now, like to see that it's being, used more, like it's actually being used and people are using it, and there's pools already there that people have already been using. And I think also like what's good about it is what it's providing. Like it's providing a real service and helping solve real problems, in trade finance by providing liquidity to SMEs. And there's actual, SMEs on there getting liquidity from, using TradeFinex. I was just on a call this morning with, someone from an industry that's probably hasn't done a lot of work, in Web3, right? But they're starting to. And when you kind of explain like what TradeFinex is doing and some things related to that, they think it's one of the most incredible things out there, that it can really help solve their problem, which is a liquidity thing, right? And it's really being used, it's really being done. And TradeFinex, I'm excited to see where that's going to go, because I think it's really picked up a lot of steam, and I'm excited about that one specifically to see what it does expansion wise, like over the next year. But that one, along with a few other things, are huge. XTC Trade Network, what they're doing, that's more around maybe the digital documents side of things, and some other things as well. And I'm excited to see how those different parts of trade finance, right, and the different things that are built for specific parts of trade finance start to work together in ways, right? Because there's a lot of processes involved in trade finance, and one of them is the liquidity aspect of it, right? Another one is documents and trade going cross border, right? And like how those can start to work together. And I'm excited to see it like next year. Like I can't wait for the 6-year article to come out, because I think that one's going to be good when it talks about those specifically.
Yeah, I know. So for those that aren't aware, I mean, and I'll give a shout out to Citizen of the Future here. I don't know if you guys know who he is, but he's done some pretty crazy mind maps and stuff like that in the past. But he always talks about the fact that when you get into trade finance and digital documentation, I mean, you get into the trade finance aspect, and like some of these laws that are in place still go back to like the late 1800s where you have to hand sign bill of ladings. And I know, and I did see maybe like 8 or 9 months, or maybe it was even like a year ago, that the UK is kind of making some progress as far as digitization of documents and things like that. But when you look at XDC Trade and what the possibilities are for digitizing documents, I would love your guys' take on it just briefly, but maybe a little bit in that regard. I can talk about a personal experience, like back in my project management days. Like we used to get a lot of parts from China and things like that. And it's not the fact that, boats move slower, given different times of the year. It's the fact that customs, there's stuff that would sit for 2 months in customs.
Yeah.
And it's
I can tell you on that one too, man. Like I've had talks with people that are working in trade finance, and then even starting to use, the XTC network and blockchain technology. And that, I think we even talked about that in the podcast in one episode. I can't remember who the guest was exactly, but we talked about that specifically, how in customs, the holdup isn't necessarily what the item is, right? And who it's from necessarily, right? It's verifying that is true and that is the real source. So imagine if customs could, without a doubt, know this is this item, this is who it's from, right? Like that itself is going to speed the process up, because that's what they spend a lot of time doing, authenticating what the item actually is, authenticating it's come from, who it has come from. So if this can, with using blockchain fixes that problem, it's going to speed things up, I mean, big time. And then the whole compliance thing you're talking about is basically like standardizing, how do we do this, right? Because each country region, has different formats on how they do documents, et cetera, et cetera. But if everybody kind of sticks to this same format, that speeds that process up as well. So it's like the information's getting there faster. The validity and source of the information is already verified and trusted. Those two things right there, I mean, that speeds things up a lot. And then you bring the liquidity aspect into things as well. I mean, those three, together, just, it's going to speed things up a lot, and it's going to make the economy run better, supply chains run better. And that's where we're headed. And I'm excited to see that evolve more.
Yeah, and it really is like if you really think about like for those that haven't kind of worked in like I guess both industries of either products or services. I mean, when you're waiting, um, when you have clients that are kind of at the end game of these things, every single person within the supply chain is affected whenever things get held up. And it's like, okay, to put into example, like if we were installing like a burner system into like an aluminum plant or like a steel manufacturer, like like a furnace plant. You wait on a part from China, that part's delayed. Every single person down to the laborers that are installing the system at the end game are total, like everything is like totally delayed. Then you think about how much money's lost, how much capital's lost, how much time's wasted, let alone opportunity cost. It's pretty wild. So I want to get into a couple more things with you guys here, and then Darren, I don't know if we have any good comments to get through, but so the trade finance, so TFD initiative here. I know you guys probably know a little bit about this, and we had the opportunity to have Andre on as well a few weeks ago. I don't know if you wanted to touch on this at all, but tokenization of private credit's pretty interesting.
What are you asking me?
Oh
Yeah.
no, Lance or Quincy.
Oh, sorry. Yeah, I thought
Go
you
ahead,
were
Quincy.
asking. Repeat that again. Yeah, sorry. I thought you were asking.
So Andre
Private
put
credit
out
opportunity. Go
yeah,
ahead.
yeah. Just
Go
the
ahead,
tweet.
Solomon. My bad, man. Go ahead and
Yeah, no. So I was just curious if you guys could kind of go through a little bit about TFD initiative, the tokenization of different aspects, even including private credit, and what Andre is kind of working on.
yeah. Well, the TFD, the good thing about that is the players that are involved in that, right? We had Andre on the podcast, XTC the Stream, a few months ago, and we talked about how that got started and kind of what they're working on, and basically it's like a consortium of different players in trade finance, down to the people that are affected, the banks, suppliers, et cetera, et cetera. And each one of them, you talked about how there's different phases, right, in the supply chain and in trade, each have their own set of problems. And the good thing about the TFDI is like they're all coming together to talk about those problems and how it can be fixed, with blockchain and other things. And private credit is just one of those, right? So I think you'll see Andre, I don't want to speak for Andre, but the TFD, but I think you'll see that there's new things that come out sort of regularly. Private credit's one, right now, and invoice factoring, et cetera, was another one. Like I think you'll see new things coming out quite a bit, right? Because each one of those that are involved in that, group, TFDI, have their own set of problems, and they're working on fixing those problems. So private credit is one, and I think you'll see others, come out moving forward.
Is that so? That's global, I'm assuming, right? That initiative, because even when you get into different, problems from like the size of some of these financial firms or size of different banks, but then you get into like something global where it's like this is jurisdictional too. Like every different jurisdiction globally has totally different regulations, totally different compliance aspect, totally different pain points because all of their customers are totally different, and it's then it gets really kind of interesting where you got all these solutions, and it's like, okay, how do we kind of basket some of these
Yeah,
solutions
and that's what
together?
the TFD does. It's coming together, identifying problems for the different parts of trade, and working together on how they can find solutions for those. So you'll see things come out pretty regularly as far as like specific things that they're actually working on. And private credit, as you mentioned right now, is one of them. And there's other initiatives in that as well. Like so within the TFD, there's the DNI that's focused on like digital documents specifically. So it's like an initiative within that initiative, basically. Like you got Congress, and then you got the committee that focuses on this in Congress. You got a committee here that focuses on that in Congress, et cetera. So within this group, there's other initiatives that are focused on other things specifically, and the DNI is another one around digital documents. And there's some good information on that. Like I know a lot of people in the community talk about it quite a bit, but take some time to really read up on who is participating in that, and what they're working on, and what part of trade are they in, and the initiatives that are being done with those groups, because there's a lot of good things that are being worked on.
I think just real quick here, we're going to get through these last couple pages I popped up when I was kind of digging in for some recent stuff here. But circularity, we talk a lot about the big enterprises, the big banks, the big industry type players, but sometimes we kind of don't talk a lot about like the way that this technology is going to affect small and medium enterprises and how they're going to digitize and how they're going to compete. I thought this was pretty cool to be able to launch a DAO for 1xDC. So I guess they're gearing up for a pilot with Digital Chamber of Commerce out of Panama, and then regenerative finance, obviously too. But this, Web3 centric content, educating professionals on transitioning to distributed ledger technology driven businesses. I would love, I guess, everybody's kind of take on this, because again, we don't hear a lot about the small businesses, the small and medium enterprises out there that are building, how that's going to impact them, which I think is interesting, because at the end of the day, they have much more of an ability to pivot and leverage the technology in ways that make sense, because they're much smaller, they're much nimbler. They have, not as much of like bureaucracies put in place, forward-thinking leadership. Are you guys surprised that we aren't seeing just way more? I mean, we are seeing a lot, but a lot more small and medium enterprises leveraging the technology and starting to kind of build it into their business models?
I actually think we are seeing it, but the funny thing about this, I've actually brought this up before in other Twitter spaces. Um, so in the crypto space, there's a culture of being able to sort of show off your project. You see this in the startup space as well. But when we start engaging with small to medium sized businesses, they're just running their business. So any sort of adoption or any sort of step forward they take to move towards crypto could be great and actually could benefit them greatly, but they're not going to advertise that. If they're a plumbing company, they're going to advertise their plumbing company. If they just so happen to have some sort of back end settlement or whatever thing that they happen to be using crypto for, they may engage with other people that they're like utilizing that technology with, but it doesn't have that same sort of advertisement that the crypto slash startup space would have. So there's a lot of different medium to small size companies that are very interested in blockchain technology, very interested in crypto, and not even just my own professional life. Even when people approach me about crypto, a lot of them have their own businesses and are very interested, whether it's real estate businesses or whether it's doing something in their invoicing. It's just that people would never hear about, some random small real estate business getting into crypto, or some random like trucker who now wants to tokenize his invoices. You know what I mean? Like, so
They're
yeah, they
not
just don't
launching
advertise it. Like,
Yeah, they're like launching a Twitter account, being like, follow me, like, retweet, and quote tweet, and get a chance to win 40 trucker coins. Like, yeah, you're not seeing like a real business do that stuff.
And I think that just goes back to what we said before, right? Like, what is adoption? Like in your mind, like, what is adoption, right? Like that's I mean, that's a point, like Quincy said. I mean, if adoption is like them using it, why would they go out and advertise and tell people like crazy, like, oh yeah, we enhanced our processes, like, that's something they'd probably talk about at like conferences or whatever, related to their industry, right? But
yeah.
that's not something they're going to just keep like putting it out. And there is more room for growth, right? Like if there is some adoption, I think that's what Quincy and I are trying to get at too, right? And I think it's speeding up, and there will be more of it, right? But just because people don't hear about it all the time, doesn't mean that it's not happening. I think it's kind of what we're trying to get at.
Let me just briefly mention this, and then we'll see if we have any questions. But we are going to be doing a Space Tuesday. I know Lance, you and Quincy will be joining us. We also have Tenity joining, and then representation from Zinfin proper as well. This is the XDC Accelerator Program. So 12, I think deadline is literally coming up very, very
July
soon.
11th, right? Or
I think it's before that. I want to say it's like June.
Okay.
But we'll be tackling this on Tuesday. So it's a 12-week accelerator program aimed at helping early-stage blockchain startups to build and grow in the XDC ecosystem. Powered by Tenity. It's a 12-week program. Again, founders getting access to business and tech mentorship to help define their business value props and develop a working minimum viable product, culminating at demo day. I want to say I saw somewhere like $100,000 or something attached to this. Don't hold that as gospel. I could have misconstrued it. But okay, yeah, applications open 13th of May to the 14th of June. Applications close. So for you builders or devs out there, we'll be tackling this a lot more on Tuesday at 1 p.m. Eastern time. Darren, I don't know if we have any comments here for us And if not, we can do some forward-looking statements, closing thoughts, anything we might have missed.
I wanted to comment. Earlier, Lance was talking about some of the standards that are involved with like titles, right? So like real estate, I believe there's like 2 insurance companies that have all the titles, and everybody has to kind of get access through them and pay to use their file. So with a lot of industries, for like the smaller businesses to adopt everything, you need the standards, you need the incumbents to kind of do the 180 for everybody else to follow. So that was my comments early before, but yeah, forward-looking statements.
Yeah.
Yeah, if anybody, so I'm curious from your guys' standpoint, how do you guys think this went? This is the first Twitter live we've ever done, so
I like it, man. Like I'd rather do this, man, than a space or something. You know, it's cool. Like it, I don't know. I like it, man. But I enjoy doing this stuff. You know, so I just hang out and talk crypto, man. At home, I'm the crazy crypto dad or the crypto guy, man. Everybody's like, yeah, okay. But
Quincy,
I'm always
This is a lot of fun. This is a lot of fun. I hop in a lot of spaces, and it's definitely cool to be able to have that like sort of like personable engagement with being able to like see your faces and being able to chat and laugh. And definitely want to do more of these because yeah, I'm sort of like the crypto. Everybody knows this. I'm sort of like the crypto sort of fanatic in a
man,
sense.
the myth, the
So it's always
legend.
good to, yeah, it's
You're
always good to
bro.
be able to hop on combos. Yeah, you're bro.
You're bro
So-
Q.
it is cool to read the comments in real time too, to see it. Some dude posted, oddly enough, I'm in this space and the Roaring Kitty waiting room.
Nice.
It's like only in this space. Well,
There's no
yeah,
place like crypto Twitter, man. No place like it.
no.
Yeah.
But I mean, honestly, like the goal of these things, I think, is to get a little bit more personable. I think sometimes one of the pain points of something like a Twitter space where it's all audio, which they're great. I mean, we're still going to do Twitter spaces, but is that you do lose out on kind of the face-to-face aspects.
Yeah.
I think it'll be really cool to bring on some of the builders within the XDC ecosystem and have them kind of share screen and highlight some of the stuff that they're doing, have some special guests on. Like, I wish we would have had Andre on to one of these to be able to like see face to face and walk through some of the
Andre, you know, Andre enjoys doing stuff like this as well. Like, I don't think I've ever asked Andre to do something like this and him say no. He may say, you know, I got to do it later or something like that, right? But I mean, I think he enjoys this stuff too, and I think the community will see. We got some stuff kind of being scheduled out, right, Solomon? We got some stuff lined up for some guests over the next couple months or so, and I think the community is going to want to watch these. So I'm excited for those as well.
Darren, I know you've done these before. What were your thoughts?
Yeah, like it feels like we're all hanging out and kind of takes away the stuffiness of the space. Like I feel like it's really formal in a space, and here we're kind of all just wearing casual clothes and just talking to each other like, you know, guys at a shop or something that are interested in the common thing.
Yeah, that's the way I like to do it, man.
Yeah.
Well, I enjoyed it. I was nervous to do it, and Darren, shout out to you for hopping in with me for about 45 minutes before, because we talk about like digitization and where this space is going, and like sometimes I like look at stuff and I'm just like, it's almost more like nervous to just get off the ground and do it rather than just doing it itself. But well, to the audience listening here and watching us, not listening, watching us, want to give a huge shout out to Lance Lilly, Ecosystem Development Manager within the XDC Foundation. Want to give a huge shout out to Quincy, Software Developer within the XDC ecosystem. Obviously, Darren Moore Jr., who helps us with all this stuff, and looking forward to doing these more in the future. And hope you guys enjoyed it. Feel free to comment if you guys have suggestions, and we'll be bringing on special guests. We'll be doing some ecosystem interviews. We'll be doing some cool screen share stuff. Like Lance said, pay attention to the next month. We've got, I think, at least 4 things kind of lined up. And shout out to the XDC Foundation for helping us to make these possible. That being said, guys, I will talk to you guys when I talk to you. See you guys.
Later, guys. Have a good one.
Later.